All right, today we're going to talk about a trade relationship that's kind of flying under the radar, but is quietly becoming an absolute powerhouse. It spans two continents, and, it's really driven by some of the biggest trends shaping the global economy right now. We're talking about the commercial ties between Brazil and Bangladesh.
So let's just jump right in with the big number, the headline. By 2030, the two-way trade between these two countries is expected to hit nearly $4.4 billion. And get this, that's the realistic, base case scenario. It's a massive jump from where they are today.
So that begs the question, right? How? I mean, how does this happen? What are the economic engines that are going to power this incredible growth? And maybe more importantly, what strategies do businesses on both sides need to start thinking about to make this a reality? Let's break it all down.
To really get a handle on the future, you've got to understand the present. So let's take a look at the structure of this trade corridor exactly as it is right now.
Okay, so you can see this pretty clearly, right? The imbalance is huge. Brazil's exports to Bangladesh, we're talking things like sugar and cotton, are massive, sitting at around $2.66 billion. But then you look the other way, and Bangladesh's exports to Brazil are way smaller, recently hitting about $187 million. But here's the twist. That imbalance isn't a weakness. It's actually the key to their entire relationship.
What we're seeing here is a perfect example of what's called a complementarity corridor. Think of it this way. Brazil is this globally competitive supplier of all the raw stuff. And Bangladesh, it's a global manufacturing hub that takes those exact inputs and turns them into higher value goods, like clothing. So they don't really compete with each other, they actually complete each other's economic cycles.
Okay, so we've established that they have this really complementary relationship. But what are the specific forces that are going to supercharge this trade over the next decade?
Well, there are three really powerful long-term trends pushing this forward. First off, Bangladesh's economy is growing fast, and its factories need more food and raw materials. Second, Brazil is just perfectly positioned as a stable, large-scale supplier of exactly those things. And third, in a world where trade policies are always shifting, both countries really need to diversify their partners. This corridor, it checks all three of those boxes.
So what are they actually trading? Well, the biggest flow is agriculture and industrial inputs moving from Brazil to Bangladesh. Then you've got this two-way street in the textile supply chain. Brazil sends cotton and Bangladesh sends back finished clothes. But honestly, the most interesting piece for the future is what's called the diversification upside. That's the big opportunity for Bangladesh to send a much wider range of higher value exports back to Brazil.
Of course, you can't ignore the elephant in the room: distance. Brazil and Bangladesh are literally on opposite sides of the world. But here's how people in the industry think about it. Logistics is a design constraint, not a deal breaker. The successful companies just plan for it. They build longer lead times right into their supply chains from the get-go.
Now, forecasting is never about finding one single magic number, right? It's about possibilities. So let's look at a few different ways the future could actually play out by 2030.
Yeah, that path to $4.4 billion isn't set in stone. The final number is really going to depend on demand, on logistics, and frankly, on how effectively businesses on both sides build those commercial bridges.
So here you can see the three possible scenarios. The conservative case puts total trade at around $3.6 billion. The accelerated case, that could push it past $5 billion. But that base case, the most realistic path, lands us right in that sweet spot of $3.9 to $4.4 billion. But notice the key trend here. Look at Bangladesh's exports. In every single scenario, they grow significantly. We're talking doubling, maybe even tripling from where they are today.
So, knowing what's possible, what can actually be done to nudge this relationship towards that more optimistic $5 billion scenario?
And this is absolutely crucial. The biggest accelerators aren't necessarily these high-level government policies. They're much more commercial and practical. We're talking about things like making contracts more predictable, having good, reliable partners on the ground, speeding up all that paperwork, and, this is the big one, building buyer relationships that lead to large, repeat orders.
Of course, there are always risks. Big swings in commodity prices, currency fluctuations, shipping delays, they can all disrupt trade. None of this is unique to this corridor, but that long distance definitely magnifies their impact. Smart businesses will have to price this risk right into their contract.
So what's the winning play here? Well, for Bangladeshi exporters, it's all about treating Brazil as a relationship market. That means focusing on trust, on quality, and on turning those one-off shipments into steady, repeat business.
And for the Brazilian exporters, the big opportunity is to create these structured supply programs that offer reliability and predictable cost to all those industrial buyers in Bangladesh.
And this really sums it all up perfectly. The future is a larger, more professional corridor. Yes, it'll probably stay unbalanced, but the real story, the one to watch, is that meaningful export side acceleration for Bangladesh. That's where the action is.
So, as you can see, the roadmap to a $4 billion trade corridor is pretty clear. The economic logic is totally sound, and the forces are already in motion. The final question really isn't if it can happen, but who. Which companies, which importers, and which exporters are going to be the ones to step up and build the commercial bridges to make this thing a reality?